Good morning, assassins. Looking at the overall market today, you can see that the market has basically been going sideways. It's basically like the SPY is waiting for basically a extreme breakout or some type of news to force it in either or direction. Even though if we jump over towards the 1 year, 1 day, we are still presumably basically bearish below that EMA line over here. 1 year, 1 day MACD is crossed down with room to go down. So until we start to get above at least that 400 realm, we won't be considered fully bullish. So you want to watch to see what's going to overall happen, especially with a lot of fear of the Fed basically going a little bit more extreme than what they may have thought because of rising inflation. So we have been going sideways. Yesterday, we basically chopped around sideways over here. We want to see if we break above 395 towards that 400. You could start getting bullish from there. If not, and we keep on rejecting this 180-day trade line, we could actually sink down and break yesterday's lows. If you go to the 1 minute, you can see we made a low of 391. And if we break that 391, that is a telltale sign that we are basically breaking out of this trend, right? So if we go to the 20-day, you can see kind of clearly that if we break that 391, we could possibly start going to 388, maybe lower from there. On the crazy note, the 20-day is starting to cross down. So that is a sign of bearishness. 20-day crossing down below the 20-day trade line. We have room to drop. So let's see what overall happens. We are kind of close to the oversold side, which means that we could possibly bounce from there, but always want to see what overall happens. We could sink into the blue and go even lower than that 388. If you look at all the other charts, right? If you look at the 180-day and the 1 year, there is a little bit more room to the downside, right? We went more oversold before, especially if there's fear. Nothing pushes the market more than fear. Those of you who traded during 2020, you guys know what I'm talking about. So watch out for those two levels, that 395 towards that 400 realm, and that 391 is going to be the major breakout zone, right? Major, down towards that 388 on the SPY. Next stock I'm going to talk about is Tesla. Looking at Tesla, Tesla's actually trying to basically push up. You can see the overall market bounce going into close yesterday, and you can see Tesla did the same. Tesla was basically fading out, going sideways throughout the day, and then we basically started to bounce this morning with Tesla. I want to see if there's any kind of news. Yeah, I was trying to check to see if any type of news, just some lawsuits on the autopilot and stuff like that. Nothing crazy, but Tesla still needs to break that 306 or 307 before we can start pushing up towards 309, or it needs to break 299 before it could go to 293. Very simple levels on Tesla. Chip sector is still going down. Looking at AMD, you can see AMD it went kind of sideways yesterday. Looks a little bit bearish. 20-day is crossed up, so you want to be careful with that. But if this does cross down, we could break that 75 range and basically start going lower. So want to watch to see overall if that happens. Jumping over towards the 180-day, you can see if it breaks 75, it could possibly start going down towards like 73 and maybe even lower. On the upside, want to watch to see if it breaks like 78, and we can start basically going to 80 up here on AMD. Nice levels with that. Speaking of the chip sector, we want to talk about NVIDIA. Looking at NVIDIA, NVIDIA is sinking down as well. Watch for the break of 129, then we can start going to like 125 and 120, or watch for the break above 133, then we can start going to 140. So watch out for that. A lot of the chip sectors are basically pulling back, saying that there's a slowdown in people buying chips and stuff like that. A lot of companies are struggling. Next, what we're going to talk about, probably one of the biggest companies, right? Amazon. So looking at Amazon over here, Amazon is basically below that 180-day trade line, right? Giving signs of bearishness. If we break that trade line, remember, when we're below that 180-day trade line, we're bearish, right? Even if we bounce and we don't break that EMA line, that means that, hey, could be more continuation for downside. So if we violate it to the upside, so that break of 129, we can start basically pushing up towards 133 up here, which is the SMA. Then we could start basically getting bullish. So watch for the break of 130. You could get bullish from there. But overall, we still have bearish confirmation, right? 180 days cross down. Our size a little bit more on the oversold, but it still has room to drop. So we want to see what's going to overall happen. If you jump over towards the 20-day, you can see it a little bit clearer that Amazon's pretty much having a choppy time as well too. So for a clean breakout, I'm watching for the 125 to 123, and I'm watching for that 130 and possibly higher to 134 and higher. So that's going to be it. We had a lot of news come out this morning. You guys could check out Market Watch or Economical Calendar to basically see what overall happened this morning. But it seems like the market's pretty much unchanged. Only thing is, I do see the 20-day wanting to cross down. So we got to see, are we going to have a choppy day or are we going to have a day with direction? Preferably as a trader, you want a day with direction. If not, if you're a scalper, then those choppy days are really much for you, basically. You capitalize from the low to the high, capitalize from the high to the low. All right, so use the stop loss. See you guys in the next video. Leave a like on the video, and I'll see you on the next one. Bye.